Hi everyone, thank you very much for joining us on this open banking series brought to you by Plaid, an open banking platform. So we're joined here by Dave Birch, the very famous Dave Birch.
It's good to see you, Erica.
Thank you for joining us here, Dave. Dave is an industry legend and well-known expert in the banking sector. Dave, if you can just give us an overview. We're looking here at open banking predictions for 2022 and where does open banking fit into crypto? Where are we at now in open banking? If you could give us an overview.
Well, open banking's had a little bit of criticism recently. I mean, people have been saying, well, look, we've had open banking, not much has happened, sort of, so what? Which is sort of a little unfair, I think, because obviously there are some open banking applications, especially in the small business area, which have worked pretty well. But they've generally been to do with what's called AISP, Account Information Service Provision. So this is where you give a third party permission to access your bank account, and they go in and slurp up some of the data, and they use it, generally for credit decisions and things like that. And that's great, it works pretty well. For the average consumer, it just means their banking app means that they can look at all of their bank accounts in one app and things like that. So it's not that exciting. But bubbling under the surface, you've got the next generation of services coming along, which are based on what's called PISP, Payment Initiation Service Provision. And that's where you can send a third party with your permission, can send money from your account to somewhere else. And that's a much more interesting proposition. That's what some people call write access to the bank account for odd reasons. So so the obvious implication of that is that you'll be seeing more payments being driven through open banking interfaces. There's a very good example of this in the UK right now, which I use, I wouldn't say all the time, but at least once a month, which is HMRC. So HMRC, tax, they now have an open banking interface. So in the old days, I would go in once a month because I have to pay the PAYE and whatever. And you'd have to look at one page and then write down how much you owe. And then you have to go to another page and type it in. And then you've got to type in your debit card number, despite the fact it's the same debit card number I've used every single month since the company was formed. And then you've got to type in your address and all of this. Well, now they have an open banking interface. So you go, it says you need to pay X pounds, and you click on OK, and you get redirected to your bank, and you log into your bank, and then that's it. And they send the instruction to the bank to transfer the money from that bank account to their bank account. And it's much more convenient. So moving from where it's basically just information services to where it's payment services is actually quite a big deal. Meanwhile, you've got other people now beginning to move into that space. And in 2022, you'll begin to see open banking initiated payments start to challenge, more traditional card payment infrastructure. And of course, you can say, well, that sounds like a crazy thing to say.
Can you give us some examples?
Well, because the idea would be, you get a message in an app. Let's imagine that. I'll use this. I'll make this up as an example. Suppose my gym app. I'm making this up as an example, obviously. But the app for my gym on my phone. Instead of me typing in my credit card number and all that sort of thing, I would say, pay, and then it would go to my bank app, and I just log into my bank app, and it takes care of it. For example, I have a Revolut card. I was using it last weekend, actually, when I was in Spain, which I use for foreign currency. And you used to load that by typing in debit cards and things like that. And now you don't. You go to the Revolut app and you say, put in £100 from my bank account, and it sends you to your bank app, and you log in at the bank, and then it does the transfer. So it's simpler and better and easier, and also more secure. So it's basically very positive. And by the way, if you think this is me making crackpot predictions about open banking, well, you have to bear in mind, Visa spent hundreds of millions buying Tink in Sweden, which is the open banking interface. MasterCard spent millions buying Aya in Denmark, which is a similar kind of thing. MasterCard bought Finicity. Visa tried to buy Plaid and got blocked by the DOJ. So it's not me who's the only person that's thinking, actually, that open, I call them A2A, account to account payments, but open banking initiated payments are going to be a big thing.
So you see for next year, this is just going to get much bigger, much more.
And for the average consumer, they'll find themselves using more and more of those kind of things. What does that translate to in the crypto space? Well, moving money in and out is a pain, but it's much easier to do it that way. So you can imagine a situation where right now you have to go and log into your bank app, you do a bank transfer to your exchange, you have to put in like the right reference number and everything so it goes to your account. Well, just like Revolut. So now you imagine you're in your exchange, you want to load some sterling in or out, you press a button and you go to your bank app to secure authentication, and then that instructs the money to be transferred. It's simpler and quicker and cheaper. So now, of course, there are some reasons why you might not want to use that. So, and I'll give you an example. One group of merchants that had historically always been unhappy with card charges and so on are airlines. You could easily imagine a situation where you've got your EasyJet app and you book a flight, and now it's time to pay for it. And instead of going to Apple Pay or typing in your credit card all over again, it says, okay, which is your bank, and you choose Lloyd's, and up comes your Lloyd's app, and you log in and the money gets transferred. But consumers have a lot of protections. I mean, for historical reasons built around cards. If goods don't show up or services are not rendered, as they say, or things go wrong, you can get your money back from the credit card company. I mean, you see it on, like, I was going to say Watchdog, but I don't know if they still have Watchdog, do they? It's like, but you see these stories like, some furniture company goes bankrupt, and all the people that paid with cards get their money back, and the people that paid with cash don't. So there's a lot of protections around cards. So there's an argument which says there's an opportunity to start building schemes around these kind of transfers, which unbundle the functions of credit cards, because credit cards are a bundle. You've got the payment guarantee, the authentication, the chargebacks and consumer, they're all bundled in one thing. Yep. Whereas different groups of consumers might want different bundles. And open banking, in a way, allows you to sort of pick that apart. So you can have, this organization providing this bit, this organization providing this bit, this organization providing this bit, and you get the bundle that you want, which is appropriate. And for crypto, that might be a very different bundle that you from buying furniture in a furniture shop or something like that. So yeah, I think that the thing is that the fact that your life hasn't been transformed by open banking yet, that doesn't mean that nothing's happening. There's a lot happening. There's a lot bubbling along.
Are you seeing crypto exchanges or crypto wallets already using open banking, or are they starting to look at it now? What have you seen?
I mean, the ones I use don't, but that doesn't mean others aren't thinking about it. I mean,
what would be needed for crypto platforms to integrate open banking? Is it just building the relationships, or is it crypto still too early?
There's two parts to it. There's how do you get the connection to the banking system, and because the banks have to, because of open banking, the banks have to have these APIs. It's a bit of a pain mucking about with the APIs. So there's companies like TrueLayer that sit there and you do a deal with them and they interface all the bank APIs for you. The bigger problem is regulatory, as always, because you've got to get what's a trusted third party accreditation in order to be able to do this. The FCA has a directory. I mean, obviously, otherwise you just get people sending you emails from, but you've just won the Nigerian state lottery. Press this button.
I get those emails all the time, constantly.
So when somebody sends a message to your bank to say, please transfer this money from Erica's account to this other account, they have to be in this directory of accredited people that are allowed to do that.
But then when you have people abusing that, I mean, the same as crypto exchanges, you look good on the exterior, you convince everybody that you're safe, people put money into your platform until you've got enough, and then you leave.
Well,
is there not the risk of people building for good score until they've got enough trust and then abusing?
I'm sure the FCA's rigorous procedures and accreditation will stop that from happening. But I mean, yes, look, is it possible somebody could get a TTP license and behave themselves for a long time and then get involved in some sort of criminal behavior? Well, yes, but it's not very good criminal behavior, because I mean, the only place I can send money from your bank account is to another UK bank account.
Which can be tracked.
Well, yeah, because, you know, if you log in and all of a sudden Dave's exchange has sent all of your money to, you know, some other account somewhere. It's not like I've taken a suitcase full of cash and disappeared. I mean, you can only send it to accounts.
Okay.
But also the way that you authenticate those transactions is, you know, you hear all the time about SCA, strong customer authentication.
Okay.
So when the Inland Revenue wants to send money from my bank account to the Inland Revenue bank account, I have to do the authentication on my phone, which in the case of Barclays is a bit of mucking about punching in a PIN number, but whatever, it doesn't matter. The standard has just been agreed for a thing called VRP, which is variable recurring payments, which is where you can give a merchant the permission to draw money from your, a bit like kind of card on file, card not present things. So you could imagine like Tesco get permission from me, and I say, okay, Tesco, I trust you. You know, you're a trusted brand. You have physical presence where I can go and get redress. You're governed by ombudsman and all this sort of thing. So Tesco or Waitrose or Sainsbury's, if they said, actually, can we have permission to draw variable amounts from your account from time to time, you'd probably say yes, because they bribe you with points because it's cheaper for them than using cards. Would I?
So that you don't have to do the whole thing every time
Exactly,
you shop.
exactly. So, you know, you walk in, you scan your Waitrose app or whatever.
Same as Amazon one-click checkout.
Yeah, and it just transfers the money from your account, but it doesn't go through the existing card rails. You see, that's the sort of thing. This is the kind of thing. So anyway, so what's coming next is this kind of next generation of services which involve open banking, but real payments. You see what Plaid's doing in the US with Dwoller and people like that. And I think for a lot of people, that actually will make life much easier, much simpler, and frankly, much more secure. Because if you know, you get a thing, we need £100 to top this up or something like that, and you have to go and log in at your bank on your bank app on your phone, that's massively more secure than, you know, typing in some random card numbers and firing them off. So yeah, I think it's an interesting time, actually.
No, thank you. And what, for crypto companies looking to implement open banking, what realistically would they need to do other than going to someone like Plaid, for example? What else is needed?
Well, like I say, I mean, I'm guessing, I don't know because I've not been through the process with them, but I'm guessing the hard part will be getting the TTP accreditation or getting a deal with somebody that does have TTP accreditation. But I mean, there's a lot of companies already on that register. And also remember, it's a European thing. So, I mean, there's a bit of jiggery pokery at the moment, obviously, because we're not in Europe. So there's stuff to do with, you know, which public key certificates are valid and all this sort of thing. But speaking very generally, if you have a TTP accreditation in one European country, then you can access bank accounts in other European countries. I mean, that bit's quite sort of organized.
Yeah, thank you. And then going to the next stage of crypto, you've got the decentralized wallets and platforms and DeFi platforms and so forth. Do you think that they will stand a chance of getting these setups and getting the regulation in place to get open banking set up?
I think.
Or what is needed there?
I think you need to talk to a lawyer about that. I don't know if there's one in the building, but that's a bit outside me. I couldn't swear to that. But what I would say is I think that DeFi is in many ways much more interesting than the underlying sort of cryptocurrencies. So is it plausible that a little bit further downstream, DeFi players will be able to integrate into what you think of as the legacy banking system? Well, actually, I think that's probably true, because remember, those DeFi players downstream will be regulated.
Yep.
You know, the current, I mean, it's fun at the moment that you have a global market of people selling each other stupid pictures of chimpanzees in sunglasses, but I don't think it's really
multiple millions of pounds.
I don't think it's the basis for a new economy just yet. So yes, downstream, I can see.
But I mean, that's only the NFTs you're touching on.
Yeah, but I mean, that's kind of an interesting point, because like that stuff is crazy. People selling each other JPEGs of chimpanzees and so on. But the technologies and tools they're developing to do that do have application in terms of, you know, financial intermediation and reducing the sort of friction in finance to moving towards these sort of decentralized solutions. You know, I've seen what to me seem very credible models of what that would look like downstream, where you have sort of this continuous trading of digital assets that's going on in these kind of 24/7 markets, mostly controlled by bots, actually, not controlled by people, but structured so as to reduce the risk and cost for you or I sort of overall. No, I buy all of that. I mean, just not yet.
Yep.
And so would that then interface with, like, I think it probably would, but it's just a little bit further away at the moment.
Okay, thank you. So just to finalize it, in summary, your top few sort of thoughts for where open banking will change and affect crypto over the coming years.
I think
bullet pointed.
I think open banking is more interesting than it appears at first. So it's wrong to sort of dismiss it on the grounds that nothing much has happened. That's not quite true. Next year, you'll see that more of a spread of these open banking initiated payment services, which actually are a good thing, generally speaking, because, as I say, they're easier, safer, and more secure. And then further downstream, in theory at least, you should see a more seamless integration between existing payment infrastructures. But remember, you're talking specifically about open banking, but remember, open banking itself is going to evolve more into sort of open finance in general, and of course downstream more into kind of open data. And could that interface with DeFi in multiple ways? I think it probably could, yeah.
Okay, no, thank you. And any last thoughts on the growth of DeFi? And what your predictions are?
My prediction is that that DeFi is real, and particularly in sort of wholesale markets, it will allow for the trading of much more sophisticated financial instruments than we have at the moment, largely because that trading will be between bots, not people. And so it should create instruments that provide liquidity at lower risk, and that's not a bad thing. That's actually quite a good thing.
No. Okay, great. Thank you so much for everybody. Thank you very much for joining this series on open banking and looking at the predictions of open banking brought to us by Plaid. So thank you, and big thanks to Dave for
You're more than welcome.
joining us.
It's always fun.
Thank you. Bye.